everyone, welcome back to the Deep Dive. Today we're going to be looking at some pretty interesting activity in the Bitcoin ETF market.
Yeah, some stuff that's been making headlines lately and, might have some people a little concerned about what it means for Bitcoin going forward.
Yeah, for sure. And to get into it, we're going to be taking a look at a recent article from trcrypto.news titled, U.S. Spot Bitcoin ETFs See Net Outflows for 3 Days.
Right.
Before we jump in, though, let's make sure everyone's on the same page. When we talk about spot Bitcoin ETFs, what exactly are we talking about?
Yeah, so basically we're talking about a type of exchange-traded fund that directly tracks the price of Bitcoin.
Right.
So you can buy shares of the ETF on a traditional stock exchange, like the New York Stock Exchange or NASDAQ, and those shares represent your investment in Bitcoin without you having to directly hold the cryptocurrency itself.
Exactly. So it makes it a lot easier for people to invest.
Yeah, a lot of people were interested in Bitcoin, but they were maybe a little intimidated by the process of, setting up a crypto wallet on an exchange, dealing with private keys, all that stuff. So these spot Bitcoin ETFs really open the door for a broader range of investors.
And what this article is highlighting is that those U.S. spot Bitcoin ETFs have actually seen a pretty significant amount of money flowing out over just 3 days.
Yeah.
Leading up to February 20th of this year.
Almost $500 million.
Yeah, almost $500 million to be exact, which is, a pretty noticeable shift.
Definitely. And what's interesting is the pattern of these outflows. They started gradually, about 61 million on February 18th, then 71 million the next day. But then on the 20th, bam, huge jump to 364 million flowing out.
Wow, that's a pretty big spike. And it's not just small players either. Some of the biggest names in the ETF world were hit hardest.
Yeah, you're looking at BlackRock's IBIT, ARK Invest, ARKB, Fidelity's FBTC, all seeing significant outflows.
Even Grayscale's GBTC, which is interesting because they just recently converted from a trust structure to an ETF structure.
Yeah, that's a really interesting point. Before these spot Bitcoin ETFs were approved, Grayscale's Bitcoin Trust, GBTC, was one of the most popular ways for especially institutional investors to gain exposure to Bitcoin. It wasn't technically an ETF, though. It was structured as a trust, which had some drawbacks in terms of trading and fees.
Right.
So when the spot Bitcoin ETFs hit the market, a lot of people thought there would be this mass exodus from GBTC.
Everyone moving over.
Right, everyone would jump ship to this more efficient and cost-effective option.
So Grayscale converting GBTC to an ETF was kind of a strategic move to try and stay competitive.
Exactly. But even with the conversion, we're still seeing outflows.
Right.
Which tells me there might be other things going on influencing investor behavior beyond just the structure of these investment vehicles.
Okay, so it's not as simple as everyone just flocking to the newest, shiniest ETF on the block. There's a little more to this story. What are some of the explanations for these outflows then? Are investors suddenly losing faith in Bitcoin as an asset?
I don't think it's time to hit the panic button just yet. Remember, the crypto market is notoriously dynamic.
Yeah, for sure.
Investor sentiment can be influenced by a lot of different things.
Right. It's definitely not always a straight line up or down.
One possible factor influencing this shift could be the delayed introduction of the strategic Bitcoin reserve.
Okay.
A lot of investors were really looking forward to that. And this delay might be causing some to pull back, wait and see what happens with its implementation.
For some of our listeners who might not be familiar with the strategic Bitcoin reserve, can you kind of explain what it is and why it's considered such a potential game changer?
Sure. So in the simplest terms, it's a proposal for a government-held stockpile of Bitcoin.
Okay.
Kind of like how a lot of countries hold reserves of things like oil or gold.
Interesting.
The idea is that this reserve could serve a couple of different purposes. First, it could help to stabilize the Bitcoin market by mitigating those crazy price swings you sometimes see. Second, it could potentially be used as a tool for international trade or even diplomacy. Maybe even challenge the dominance of the US dollar in global markets.
Wow, so it's like a national savings account for Bitcoin, but with much bigger implications for the global financial system.
Yeah, exactly. And because it would involve direct government participation in the Bitcoin market, a lot of people see it as a major step towards legitimizing Bitcoin as a global asset.
That makes sense. So the delay is creating a bit of a wait-and-see attitude among some investors.
Right. They're hesitant to go all in until they know more.
Makes sense. So we have some investors potentially holding back due to the strategic Bitcoin reserve delay. Are there any other factors that could be contributing to these outflows?
Well, there's an interesting perspective from crypto analyst Miles Deutscher. He tweeted recently suggesting that the initial excitement around the approval of these spot Bitcoin ETFs, what some call Trump euphoria, might have already been priced in. So in other words, the market might have gotten a little ahead of itself in those early days, and now that initial wave of optimism is kind of fading, investors might be waiting for the next big thing to come along.
So it's like everyone rushed in at the beginning, and now they're taking a breather, assessing the situation, and waiting for the next big thing to get them excited again.
That's a great way to put it.
Okay, so we've got some potentially delayed gratification with the strategic Bitcoin reserve and maybe a bit of a post-hype cool-down period. But despite these outflows, there's another piece of the puzzle that we need to look at, and that's institutional interest in Bitcoin. Because we can't ignore the fact that while some are pulling back, major players are still entering the game.
Absolutely. And that's something we'll dig into right after the break.
Stay tuned. Welcome back to the Deep Dive. Before the break, we were talking about how even with some of these recent outflows from Bitcoin ETFs, there's still a lot of interest coming from big institutions.
Yeah, it's interesting, isn't it? You've got some investors maybe getting a little spooked, maybe taking some profits off the table or waiting to see where the market's going to go. But then at the same time, you've got these big institutions with tons of money to spend and a much longer term outlook stepping up their game in Bitcoin.
Yeah, it's almost like those institutional investors are seeing something that the more short-term focused investors maybe aren't.
Right, and to really understand what's driving these institutions, you got to zoom out a little bit, look at the bigger picture.
So let's do that. What are some of the core reasons why institutions might be drawn to Bitcoin, even with all this uncertainty in the market right now?
Well, one of the big ones is that people are starting to recognize Bitcoin as a potential hedge against inflation.
Okay.
Traditional financial systems right now, they're facing crazy amounts of money printing. Government debt is out of control, and that's really hurting the value of, the US dollar.
Right.
Makes everything more expensive. Exactly. And because Bitcoin has a fixed supply and it's decentralized, some people see it as a way to protect their wealth from that devaluation of traditional currencies.
So it's like a digital gold, a store of value that can't be messed with by governments or central banks.
That's the idea. And that's a really appealing idea to institutions who are trying to manage massive amounts of capital and preserve their wealth over the long haul.
Yeah, that makes a lot of sense. And we're actually seeing this play out in real world examples, right?
Oh, absolutely.
Yeah.
Take Mubadala Investment Company, for example. They're Abu Dhabi's sovereign wealth fund. They manage hundreds of billions of dollars, and they just dropped almost $437 million into BlackRock's IBIT, one of the biggest Bitcoin ETFs out there.
Wow, that's a pretty serious investment.
Yeah, no kidding.
Yeah.
And it tells me they really believe in Bitcoin's potential in the long run, even with all the ups and downs we're seeing right now. And then you've got Barclays, the British bank. They revealed a $131 million investment in IBIT2 as of Q4 2024.
So you've got sovereign wealth funds, banks. These aren't your everyday traders just trying to make a quick buck. These are institutions that are responsible for protecting and growing their assets over decades, and they're choosing Bitcoin.
Exactly. And it's not like they're just throwing darts at a board. They've got entire teams of analysts, economists, risk managers, all looking at these opportunities. They don't make these decisions lightly.
Right. So this leads to an interesting question. If these institutions are thinking long-term, seeing Bitcoin as a hedge against inflation and a good store of value, could these ETF outflows actually be a good buying opportunity for people who share that long-term vision?
That's a great question. And it's definitely possible. Institutional investors, they tend to have a much longer time horizon than your average investor. They don't really care about the day-to-day price swings. They're looking for assets that could grow significantly over time.
So while some people are getting spooked by the recent news, maybe the outflows or the delay of the strategic Bitcoin reserve, these institutions might see this as a chance to buy more Bitcoin at a lower price.
Exactly. And remember Miles Deutscher talking about investors waiting for the next big catalyst? Well, for these institutions, that catalyst might just be their long-term vision of how Bitcoin fits into the future of finance. They're not playing the same game as everyone else.
Fascinating. But we still got to acknowledge that the crypto market is volatile. Even if these institutions are bullish on Bitcoin, there's always a chance something unexpected could happen and affect the price.
Yeah, that's true. Got to be careful. Past performance doesn't guarantee future results, and there's always the risk of something coming out of left field and shaking things up. But that's part of what makes investing so interesting, especially in an asset class like Bitcoin that's still so new and dynamic.
Okay, so we've looked at the outflows explored why they might be happening, and discussed this other side of the story with all the institutional investment. But there's another piece to this puzzle that we haven't really talked about yet, and that's how Bitcoin itself is reacting to all of this. Because despite all the back and forth, its price has remained relatively stable. It's holding around $98,000.
Right. And that stability amidst all these outflows raises some questions. Is this a sign that Bitcoin's maturing as an asset, becoming more resilient to these market swings, or is this just the calm before the storm? You know, a brief pause before we see some big moves either way. That's what we're going to explore after the break.
Stay tuned. Welcome back to the Deep Dive. We've been talking about these Bitcoin ETF outflows and the fact that big institutions are still pouring money into Bitcoin. And the big question is, what does this all mean for the price of Bitcoin? Is this stability we're seeing a sign of strength, or are we just waiting for the other shoe to drop?
Yeah, it's the question everyone wants answered, isn't it? And unfortunately, there's no magic 8-ball that can tell us for sure. But what we can do is look at what's happened in the past, analyze what's going on right now, and explore the different possibilities.
Okay, so let's start with that stability. Bitcoin's holding pretty steady around $98,000, even with those ETF outflows, which is interesting because Bitcoin has historically been known for its volatility. So what's contributing to this newfound resilience?
Well, one thing to consider is that the Bitcoin market as a whole is maturing. More and more institutional investors are getting involved, and they bring with them a lot of experience, a lot of sophisticated strategies, and a much longer-term outlook.
Right, so it's not so much about the average investor making emotional decisions.
Exactly. And that institutional presence could actually be creating a kind of price floor for Bitcoin. You know, their buying power might be offsetting some of the selling pressure coming from those ETF outflows, which would prevent a bigger price drop.
That makes sense. But couldn't this stability also be a bad thing? I mean, some people might say that it makes Bitcoin less attractive to those who are drawn to it because of the potential for big, quick profits.
Yeah, that's a fair point. Bitcoin's volatility has always been a big part of its appeal, especially for those short-term traders and speculators. If it becomes too stable, it might lose some of its shine for that crowd.
So we might see a shift in the type of investor who's drawn to Bitcoin, moving away from those looking for quick gains and more towards those who are interested in long-term growth and protection against inflation.
Right, exactly. And that shift could have a big impact on Bitcoin's price trajectory. If the main players in the market are those with a long-term vision, we might see less focus on the day-to-day price movements and more emphasis on those fundamental strengths of Bitcoin as an asset.
So this brings us back to that idea of a next big catalyst that we talked about earlier. What kind of things could happen that would really get the market fired up again and push Bitcoin's price higher?
Well, that strategic Bitcoin reserve is still a big one. If a major government like the United States were to come out and say, we're creating a Bitcoin reserve, that would send a huge signal to the world that they believe in Bitcoin's long-term value, and I think you'd see a flood of new investment from both institutions and individuals.
Yeah, it would be like the ultimate stamp of approval for Bitcoin, wouldn't it?
Definitely. And beyond that, continued adoption by businesses is crucial. The more places that accept Bitcoin as payment, the more useful it becomes, and that naturally leads to higher demand.
It's all about real-world use cases, right? The more people can actually use Bitcoin in their daily lives, the more integrated it becomes into the global economy.
Exactly. And then you've got all the innovation happening within the Bitcoin ecosystem itself. Things like those layer 2 scaling solutions that make transactions faster and cheaper, and the whole world of decentralized finance, which opens up all sorts of new possibilities for earning interest and borrowing against your Bitcoin.
It's a constantly evolving technology, isn't it? Every new development seems to open up new doors for what's possible.
That's why it's so exciting. It's not just a static asset. It's this dynamic ecosystem that's always pushing the boundaries of finance and technology.
So even with these ETF outflows, it sounds like there are a lot of reasons to be optimistic about the future of Bitcoin.
I think so. You've got this growing adoption by institutions, expanding real-world use cases, and constant technological innovation. There's a lot to be excited about.
Definitely. But of course, investing in something like Bitcoin is never without risk.
You're absolutely right. There are always risks and uncertainties, especially with something as groundbreaking as Bitcoin. But for those who believe in its potential and are willing to hold on for the long haul, the future looks pretty bright.
Well, I think we've covered a lot of ground today. We've explored these ETF outflows, the increasing institutional interest, the stability of Bitcoin's price, and what the future might hold.
It's definitely a fascinating space to keep an eye on.
Absolutely. And that's what we're all about here on The Deep Dive, exploring the complex world of finance and helping you make sense of it all. We hope you found this deep dive into the world of Bitcoin ETFs insightful.
It's been great talking about this with you.
And remember, the journey of understanding Bitcoin and the world of crypto is always evolving. So stay curious, keep learning, and as always, invest wisely. We'll see you next time on The Deep Dive.